welcome everyone. My name is Parag Mamnani. I'm with Webgility, and joining me here is Seth. Hey, Seth.
Hey, thank you for having me, Parag. It's an honor, and I'm excited to get into this today.
Excellent, excellent. Well, today we're going to be talking about real-time accounting. I'm the founder and CEO of Webgility. We're a real-time accounting automation software company, and with me again is Seth, and he's Chief Nerd. Seth, you want to tell us a little bit about, tell the audience a little bit about yourself?
Sure, I am the chief nerd at Nerd Enterprises Incorporated, and long story short, at this point, we create training videos and courses for accountants and bookkeepers and the business owners they serve to learn how to do what we call bulletproof accounting and bookkeeping, which, as you can gather from that term, it means the accounting's sort of impenetrable. Everything's verified, everything's sort of audit ready if necessary. So.
Excellent, excellent. And as you can imagine, Seth has a tremendous amount of experience in the e-commerce accounting world. I've been in the e-commerce space for now about 25 years and also a former Amazonian. So really glad to be able to get this chance to meet everyone here that are, I'm imagining, sellers on the Amazon platform. The agenda for today, we're going to be talking a little bit about why is e-commerce accounting so hard, and why it's also very interesting, and how you can really make the most of it to help your business. We're going to talk about what is real-time accounting and how can it really help you unlock financial data and help you really drive growth for your Amazon business. We're also going to be going through some growth strategies, and with my experience and with Seth's experience combined, we'll try to give you a few tools, some tips and tricks, also how to put your Amazon accounting on autopilot. And we'll wrap up the session today by going into a Q&A where we'll try to address as many questions as the audience has. And please feel free to put your questions into the panel here on the GoToWebinar, and we'll try to get to them towards the end of our presentation. So diving right in, let's talk about e-commerce accounting and why it's so hard. So first and foremost, generally speaking, accounting is not everyone's favorite topic, and it's probably last on your mind. But with e-commerce accounting, it's actually even harder and more challenging. And it's primarily because your financial data is not coming from just one source. It's not from your bank account. It's not from one channel. Your data is scattered everywhere. It's coming from a lot of different places, a lot of different systems. And you have this information available, frankly, in just so many different formats that it's really hard to put it all together, not to mention all the complicated terminology that gets introduced, which makes it really hard for most business owners to really make sense of. And last but not least, of course, you need to do your accounting for sales tax compliance. And also, if you're selling on multiple channels or using multiple currencies, it can get overly complicated, and in fact exponentially, I should say. Seth, I know you've kind of built a real business of helping not just business owners, but also helping financial and professionals and bookkeepers and firms. Talk about why you feel like e-commerce accounting is so hard. Why isn't it easy?
So yeah, first speaking to the first part, the funny thing is I started out looking to create content for business owners. And I thought, all right, if I create a bunch of videos and put them on YouTube, I'm going to get the business owners. Some of them will learn how to do it on their own, and that's fine. And then others will go on to hire me. But maybe ironically is not the right word, but to my surprise, it turned out a lot of accountants and bookkeepers started following my YouTube channel and watching my videos because they wanted to learn how to better serve their clients. So I just went with what the universe was throwing at me and said, well, I'm going to indulge this. And again, long story short, I was sort of pushed into serving e-commerce businesses by the guy who became my first client in this space. And he had seen my videos, and even though none of them were on e-commerce specifically, he was convinced I was the guy that he needed to help him. And so I did. We, came to an agreement that I would work with him. He would be paying me full price while I frankly figured out how to put all the sort of plumbing together, so to speak, to get an e-commerce accounting system to work, and that's what we did. And the reason that in itself speaks to the fact that it is very difficult. He had said to me that he had been through 4 different bookkeepers, none of whom could get it right. And so I got involved and I started understanding his business, and he was primarily selling on Amazon. He was selling on other channels as well. And I started looking at this and thinking, okay, I knew enough at the foundation to understand that I have to follow, first and foremost, the front line. How does the money come in the door? And that's your sales channels, right? And he had a multi-distribution system already. So I had to understand first and foremost that he had money coming in from different shopping carts, let's call them. And I had to figure out how to deal with that. And then I had to figure out how to deal with the different payment methods, right? And now at that point, right alongside that, we're looking at, okay, well, what did he sell? Well, that's his inventory, right? So we have the inventory complexities, and oops, now we've got sales tax. Right? So we've got all these things that come into play right away that make the accounting complex. There's a lot that goes from the $1 gross of a sale to the net amount, which is less than that, that's going to land in their bank account at the end of the day. And as the accountants, we have to figure out how to report on and reconcile everything in between. And it's a lot.
It is. And in fact, one of the common misnomers I'd say is that, well, it's hard, so do I really need to do it? What's the value? Let me just, pass on my books and the bookkeeper can help me take care of it. And oftentimes what, most businesses end up doing is you think of accounting as sort of an end of month exercise because it's hard, right? And you want to do it for compliance. But ultimately, what you got to realize is that simply closing your books, just reconciling what your bank statement says against your accounting system is not enough. So, Seth, what have you learned? What is that? What is the opportunity really that small businesses are missing if they simply just close their books every month, once a month, or once a quarter even, I've seen from some businesses?
Well, I would say you're missing all of the critical data. If you're just reconciling the net amounts you receive, you're literally missing the whole business, right? Because you have no idea what's sold, you have no idea what it's sold for, you have no idea what it costs to sell that item. That's all the stuff that's in between. And so it's not a way to run a business. It's literally like trying to drive your business with a blindfold on and hope for the best, that the stuff that you think should be selling is selling, and you look at your bank account, and if it's going up, that must mean we're doing well. If it's going down, then we're in trouble, right? And that's not a way to manage a business. It's terrible.
Yeah, indeed. Man, if I had $1 for every time I've talked to a business, they're doing even, $1 million of online sales, and the way they track their cash flow is just simply looking at their bank statements periodically. They're just missing so much insight. And what's fascinating is most businesses, I find, tend to sort of realize this just a lot later in their maturity. And I think that they could really accelerate their growth early on if they kind of build, this financial management as just a core skill. Whether you do it as a business owner or you have someone on your staff that can help you. And ultimately, if you become really informed about the value of this real-time accounting, as Seth mentioned, I think the beauty is you get such a clear picture of your financial health as it happens. And as you can understand your margins, if you get a clearer picture of your cash flow, now you're not just waiting for an Amazon settlement or at the end of every period to kind of retroactively look back at, hey, what happened? Now you actually can look forward and you're in the know throughout the month. You get insights early on so you can act. And we'll talk a little bit more in this presentation about what are some of those insights and what are some strategies that you can employ. But ultimately, it helps you predict what's to come. It helps you get more prepared. And we've seen businesses grow dramatically by simply being able to fine-tune their costs. They've been able to fine-tune product pricing. They've found creative strategies for diversification, whether it be through their catalog or through different sales channels. And it's even unlocked opportunities for growth by being able to get capital, which you wouldn't be able to get in most cases simply by looking at a settlement statement or just doing summary level accounting towards the end of any given month. Any other benefits I've missed, Seth, or does that, I think, capture a lot of the value that one can extract from being able to do real-time accounting?
Yeah, no, I think that covers it really well. The only thing that was in my mind as you were speaking that I want to share just to underscore everything you said is that, the e-commerce world is frankly cutthroat competitive. And if you don't have real-time data like you're talking about, it's too easy for another merchant to come in selling the same or similar product to what you're selling, and somehow they're able to sell it for less. And so when people are searching around, they can undercut you like that. So without that real-time data, you'll have no way of knowing until it's way too late and everybody's already going and buying your product from somebody else, and then all the other things that come up that I know we'll talk about later, for example, the inventory analysis that makes sure, because the other reason I could miss sales besides somebody undercutting me is I don't have enough stock, right? And so
Yep.
if somebody tries to order from me and it's on back order, they're going to go, I'm not going to wait. I know as a consumer, I'm not going to wait. I'm going to go find the next person who has it. As long as there's no significant differentiation in the product itself, there's no reason why I would want to wait for your version of the product. So that's the kind of stuff that I think really underscores why it is so important to have real-time accounting data, which means daily, and not waiting until the end of the month or whatever, interim period your business owners currently may be using to analyze their financial statements.
Exactly right. And what we've observed, and this is some data we've compiled from some of our own research and also talking with lots of bookkeeping and accounting firms, is on average, we've seen folks be able to generate at least 3 to maybe even 7% increases in margin. They're much more likely to be able to generate higher profits. Again, it's also about control. So you're also seeing very dramatic impact on your ability to make decisions because you're not flying blind. You're not waiting for just a settlement report periodically to make assessments about your business. And ultimately, if you're able to react and predict, for example, your stock level needs, and you're able to adjust your pricing, what you're going to see is that you're also going to be able to do, get a lot more improvements in your customer retention. So this is just some baseline analysis and research that we've compiled, but ultimately having a good control over your financials is the recipe to unlock growth. And it's not really just a means of achieving compliance. It's not just about keeping your books neat and tidy. It's about being able to really leverage that information to drive growth for your business. So let's talk a little bit about what you can do with this real-time accounting. What is the power that you can get from your real-time accounting? And first and foremost, it's really about profitability. And profitability, it's not just about figuring out what profit you're getting at a particular channel, but you really need to be able to dig in and understand what's really working. And I know, Seth, you and I have chatted about this one, but being able to get margins at a product or an order level is just so hard. And if you can, put a system together that gives you some of this insight, it can unlock a lot of magic. I know you were sharing a story earlier about some, customers you were working with. Talk to us a little bit about your experience with, how this has really helped your customers.
So one of the biggest challenges in the order level margin area specifically that I've run into with everyone is getting your logistics costs figured into the cost of your inventory, right? And the untrained bookkeeper, frankly, will look at that and say, well, I ordered 10 of this item at this price, and they'll start prorating it based on the quantity, and that's not how logistics works, right? Shipping is based on weight. The cost is based on the weight. So in order to prorate it properly, you need to factor the weights in, not the quantities, and that makes it extra challenging. Right. So we had looked into trying to find ways from the logistics companies to get like Excel versions of the billing so that we would have the weight in a column and we could do some calculations to absorb the cost into inventory. But we quickly figured out that even if we could get that, it was the time it would take to compile that data and then book the entries to absorb it. Forget about it. There's no way. We would have to hire a full-time person just to do that, right? Because this was like $1 million a month Amazon seller. So, just the volume alone. So we had to come up with some assumptions and say, all right, every logistics bill is going to go into an asset account as, like prepaid logistics costs. And then we came up with an assumption about how quickly that would get amortized. I think we figured it was about 4 months from the time something got shipped till the time the last of those items got sold. And so that's what we did. We did a 4-month assumption, and I put in a recurring journal entry on every logistics bill that would take care of that for us. So at least we could automate it. But the point is, without that level of a detail absorbed into our inventory costs, we're missing a significant piece, right? And there's lots of other things.
Yeah, and indeed, I think I guess, not to scare the audience away with the amount of effort some of this could be, but there's obviously software out there, including Webgility, that can provide some of these capabilities. But ultimately, even if you're not leveraging software, depending on the scale of your business, the details that you dive into at these levels, that's what's really going to it's going to unlock a lot of insights to really help you understand what can you tweak. Because many times what we find working with our customers is that they haven't taken into account all of the different aspects that go into calculating their margins. And without being able to do that, you're just not well informed about which products are truly profitable, or which orders, depending on, for example, if you're spending on certain advertising channels, which orders are actually profitable. And you'd be surprised how many customers we've come across that look at some of these insights and go, oh man, I thought I was actually making money here because my top line looked great. But ultimately, when you take into account all of the different costs, you realize you might not actually be making money on some of these campaigns and with some of the products. So margins and understanding profitability is absolutely, one of the key reasons to be able to do real-time accounting. And then to really understand your margins, you not only want to look at obviously your top line, but as I mentioned, you want to be digging into all of the costs. So talk a little bit about, Seth, like just the extent of like fees and charges. And obviously we understand all of the complexity behind, looking into your Amazon settlement report, but you really have to keep track of a lot of different fees at different levels. And this is where kind of having some piece of software to help you automate this and really understand your fees is so incredibly valuable.
Yeah. I remember the first time I looked at an Amazon settlement report and I downloaded the CSV file. And when I opened it up, I was like, what the, like I didn't know where to begin, right? But little by little, I played with it. If you slow down, I've learned, you can kind of start figuring these things out. And so I just widened all the columns up so I could study the title of each column, look at the data within, and little by little, I started to figure out, okay, this is starting to make sense now. And one of the critical things was I saw where the SKU was, and I could tie the SKU in that settlement report back to, what we had in QuickBooks, for example. So I could start piecing together how things link up. And then once I got the basic layout figured out, I was able to create a pivot table that quickly broke down by SKU all of the Amazon fees. And I was like, okay, now this makes sense. And some of the language I didn't fully understand in the beginning, but I started to figure it out, a quick Google search here and there. I remember the first time I saw the term.
It's a moving target, Seth. You think you understand the numbers the fields now.
Yeah, but I remember seeing like clawback in there, and I was like, what's a clawback? And then I learned it was a commission thing. And so even based on that, I didn't need to know at such a minute level what exactly everything was, but as long as I understood what had to do with the commission, what was a shipping related fee, what was based on taxes. And one of the things that stood out was I remember the term principal that came up in the settlement report, and that clearly referred to the actual selling amount of the product. That was the $1 gross thing. So little by little, I pieced it together, and then I was able to give my client really powerful, detailed information using that pivot table, and that helped us a lot. That helped us a ton because we could see pretty
Absolutely.
much order level, other than the things that Amazon wouldn't have known about, costs that we paid directly, let's say, we could see order level exactly what it cost us to sell each of those SKUs.
Yeah, and shameless plug here, but you really don't have to become an Excel whiz. You just need good software, right? Like if you can really get your hands on something that's going to be powerful and help you understand a lot of these things. We definitely come across a lot of customers who love to use Excel, and certainly can flex their pivot table muscle, but then definitely tools that can really help to analyze a lot of this. And as you look at your incoming revenue, you understand your margins, and then you really look at kind of the fees. At the end of the day, what you want to get really good at with real-time accounting is really understanding how to manage your cash flow. And why is cash flow important? Well, if you're really only booking your, payouts and you're only looking at your financial statement a couple of times a month, what you're missing is, I think, the beauty of all that's happening in real time throughout your business. Because if you can get a good sense of what your cash flow is, which, by the way, I believe, Seth, is the number one reason why most sellers struggle, is because they can't manage their cash flow really well. But if you could talk a little bit about what are all the things that you can do if you really have a strong control of your cash flow. What are all the levers that you can pull here?
So it's funny. I would go even a step further and say that cash flow is more important than profits, right? You can be running at a loss, but if you at the same time somehow have good positive cash flow, you'll be in business. Whereas on the flip side, I could be running at a very good profit, but if my cash flow is terrible, I'll be out of business, right? Now, the one good thing, you talk about the levers. One lever that doesn't really exist for e-commerce is accounts receivable. Right? In other kinds of businesses, accounts receivable is the first cash flow lever we try to pull, which is to say, let's see if we can improve our collections period, right? With e-commerce, that doesn't exist. You're not invoicing people; they're paying you right away, and then you're on some level at the mercy of that particular distribution channel and how they process sales, as far as how long it takes to get your money. So if you're selling on Amazon, it takes maximum 2 weeks, right? Because it's a 2-week sales cycle. So bottom line, that's the first lever, is the actual, flow of the income from the sales. What's after that? Well, the other side of that, the obvious one, is accounts payable. How quickly are we paying our vendors and suppliers? And that's one you have to be careful with, right? Because I don't want to piss them off by paying them too slowly. So I tend to tell my clients, don't even play with that. Pay your people right away. Unless you truly can. So which leaves us with the one lever that we can pull and manage, but we have to manage it very carefully, which is inventory turnover, right? How quickly can we turn over our inventory? That is the one lever we can pull over and over and over again. And that's going to speak to very good and detailed inventory management. We have to understand what's selling, and we have to plan and have really solid strategies around inventory management so that we don't overstock, because that costs us and it ties up cash. We don't understock, because that will cost us sales. Right? So we have to have that sweet spot for every different SKU we sell in terms of what's the right amount to keep on hand and how much is too much, and so on and so forth. That's really where we can get into some of the very technical inventory analysis that, Parag, you and I have talked about, like ABC analysis and VED analysis and HML analysis. And so if we have time, I'm happy to go into some of these and give high-level breakdowns of what they mean.
Yeah, we'll definitely get to that. But I think, it's safe to say that, managing your cash is so critical, and simply relying on, what you get at the end of a payout period is not enough, because if you can really get a sense of that, you can make so many adjustments, including advertising spend. I know we talked about adjusting stock, but if you know that, your cash flow is not great, and you want to really increase your sales, you can adjust pricing, or you can also adjust your marketing spend to try to increase your sales velocity, which could really help you generate that additional revenue and get the cash flow engine moving. So again, understanding what's happening throughout the course of your business is really where it's at. And coming down to sort of strategies that we've seen a lot of our merchants leverage is, once you have access to the right financial data and you can understand that product level profitability, one of the most common things we see is merchants testing with pricing levels, and also being able to test different channels. What have you seen in terms of margin drivers, Seth? Any creative ideas, any stories you'd like to share about from your customers?
So when it comes to adjusting prices, almost every business I've worked with, will report they can't increase their prices. They'll price themselves out, unless they sell something that's very unique and in demand, right? So these are all the factors you have to take into consideration. You could try increasing prices, but oftentimes you'll be shooting yourself in the foot if you do that, right? The other side of that is, how can we get more profitable? So if we know that there's a product that we have that sells really well, so that the amount that we carry on hand is not as important, then I can look to buy in greater bulk to get a discount to increase my margin, so that when I do sell it, it hits me in the bottom line. So those are some of the things that we can do, and also just monitoring your numbers, like we've been talking about. So I have a client who, he kept a close eye on everything. With Amazon, every 2 weeks we would download that settlement report, but he had other reports he would download, and he kept a very close eye on his cost of goods sold percentage. And this was years ago now, but there was one time when he noticed a big jump in his cost of goods sold percentage. And, he was paying attention to this. That's the key right there, is paying attention, right? Being
Absolutely.
on it. And like we talked about, the frequency with which he was looking at things was not monthly, it was daily. And when he saw this big jump in cost of goods sold percentage, his first thought was somebody made a mistake. And he checked into it. Nope, the accounting was all fine. But without going into all the gory details, bottom line, he found an issue that would have cost him many tens of thousands of dollars had he not caught it when he did. And it was something he was able to correct and get fixed, and and we moved on. So that's a good example of where it's really important, because a mistake like that, going back to profit margins, can really screw up your margins in a way that it can and was in this case prevented, right? But B, all of a sudden you'll just think, hey, our margins have shrunk. Maybe it just is what it is, and you won't even know where to look to find where you could fix an issue like that. So just constantly.
Yeah, and what we've seen across our merchant base, to your point, is whenever merchants have leveraged a lot of our reporting on our platform and really gotten to understand their margins, so often they find they're surprised when they're actually tracking, for example, their fulfillment costs, and really looking at that breakdown across different order level profits, especially if you're a multi-channel seller. Being able to differentiate between your margins across different channels, because in case of, say, you're an Amazon seller, a lot of your fees are baked in, and you can kind of see that in your settlement report. Whereas if you're selling on other channels, you might not have that level of visibility, or you might be running an ad on a different ad platform. And now you need to kind of join all of that piece of information together to get a real sense of your profitability, which can really unlock so many different opportunities for growth. Speaking of multiple channels, one of the key strategies that we see most of our merchants employing is diversifying channels. And I know we're doing a webinar here with our close partnership here with Amazon, but oftentimes it's about diversifying to really experiment. And it's also really get a good sense of where you're making more money. I think it's really a myth that Amazon fees are high in many cases, because when you start to add up and you really diversify your channels, you start to understand how much you're spending on marketing and what sort of your cash flow and velocity is on selling on different channels. That gives you so much more control and much better understanding of where your levers are in different channels, whether it's lower margin and higher velocity of sales, or it's higher margin and slower velocity if you're selling, say, on your own sales channel. But really being able to understand some of those details really should help you get a really strong sense of which channels are performing and how you can leverage each channel for certain types of strategies. We've even seen sellers being able to take a certain part of their catalog, put those on Amazon, and put another piece of the catalog on a different channel, especially if you're looking to do things like liquidation, or you have, bundles or certain types of products that come across can be attributed on different channels differently. I know, Seth, you and I chatted about this one too. I believe you were working with a couple of customers, and they found that, once they added up their fees, Amazon turned out to be the winner there.
Yep, 100%. In fact, I had a client who, the way we tracked things was each sales channel in QuickBooks Online was a customer. And so we tagged everything so that I could run a profitability report by sales channel effectively. But as we mentioned earlier, there are a lot of costs that are not directly absorbed into inventory that we couldn't specifically tag that way. So at an initial glance, I said, hey, you know what? It looks like this other sales channel might be more profitable than Amazon. If we were to come up with some marketing strategies to try and drive more sales through this channel, what would that look like? And my client challenged me on it. He pushed back and he said, not so fast. We have to factor in this specific case, he brought up the shipping costs. That with Amazon, it's all done FBA. So Amazon takes care of the shipping, and that's included in the fees that we pay. And in the case of this other sales channel, we were, I had to factor in the shipping. Now, what made this analysis easy for me was all the shipping for that channel was paid for with one particular vendor. So all I had to do was reclass all that shipping cost to this one sales channel. And when I did, it turned out that sales channel was actually less profitable than Amazon was. So kudos to Amazon there. But my client proved me wrong.
Yeah, and so many stories. We've worked obviously with thousands of merchants, and we're fascinated by all of their findings. And what's interesting, it's when you talk about sort of diversity of channels, we see merchants also using a variety of different ways to come to some of this analysis. A lot of our merchants will actually take all this data and record it in QuickBooks, where they have certain reports set up, and QuickBooks can then become that source of information, and they can run a lot of their P&L if they're comfortable with QuickBooks as a tool. So you have that flexibility of kind of which tools you really rely on, but ultimately you want to use software. That's the key here. Another key growth strategy that we wanted to touch on today was getting access to working capital. And I know as businesses scale, we find, working capital is kind of I would say the sweet spot is if you're in a revenue range of, call it about $500,000 of GMV to about 10 million, you're a great candidate for being able to access additional working capital. And in order to secure this capital, though, you need those financial reports. And once you have those financial reports and have a good sense of your cash flow, your turnover, and you can actually leverage that report to give you a sense of your forecast, there are a lot of providers out there, including one of our known partners, OnRamp Funds, where you can actually plug in your Amazon sales channel history, and it'll give you within minutes a suggestion of how much working capital you can get access to and at what rates and so forth. So you can get qualified really quickly. And this is just one more strategy that we've seen a lot of our merchants leverage in order to drive additional growth. And working capital, as Seth pointed out, can actually be one of the real sort of Achilles heel for your growth, because if you don't have a good sense of what your cash flow is and what your turnover is like on your inventory, it's actually going to be really hard to even make a decision of whether you can confidently take in additional capital or not.
Mm-hmm. There's a formula that I've used in the past. I've worked with a good friend of mine, Mike Milan, on this, and he calls it the speed of cash. And it's a formula that we've used to calculate based on your inventory turnover, if applicable, receivables, and then certainly payables. Using all that information, we are able to calculate, at least in theory, how much cash you should have access to at all times. So once you have that number, you look at how much is in the bank, and then usually there's going to be a gap, right? So how do you fill that gap? With a financing option like you mentioned, Parag? Not that you would borrow it necessarily, but let's say we figure out that cash flow gap is $100,000. I need to know at that time that I have at least $100,000 available in, say, a line of credit of some kind, so that I can tap into that. In other words, that's what we refer to when we talk about access to cash. It's what's in the bank plus what I have access to borrow right now. Not having to first go apply for a loan, but right now, this is what I have access to, so that if we're coming into the holiday season and I realize I'm a little short on inventory and I'm short on cash, I can borrow what I need to stock up on the inventory that I need, so I don't have stock outs And then I can, after I generate all the sales from the holidays, I can go pay down that line of credit once the money's all come in, and then I'm good, right? That is so important to this, to this kind of a business for sure.
Indeed, one fascinating story. I've actually worked with some merchants where, a lot of them don't, well, they ended up realizing how their credit cards are access to 30 days of free capital. Because you don't have to pay your credit cards until the statement is due, and they're actually able to leverage just that additional bump to drive up, obviously, things like an advertising campaign during their peak periods. But to be able to have the confidence to make that decision really comes from knowing your data, right? Like understanding your financials is what really helps you make those kinds of interesting growth strategies. And so I'd say one of the keys here is if you can understand and really leverage this financial information, at the end of the day, I think it's about control. And whether you're a business owner or you're a finance professional, a CFO, having access to this real-time information really gives you a sense of control. And now, once you analyze a lot of your trends and you start to really dig in, you can employ so many creative strategies to differentiate yourself and really use that financial control as a competitive advantage. Have you seen, Seth, any other kind of really creative strategies? I know we've covered quite a bit here, and I'm just looking at time here. I want to make sure we leave some time towards the end for Q&A. But yeah, lots of great strategies we've already talked about. But anything else on gaining control and any anecdotes you'd like to share?
One thing that pops into mind, and this comes from at least two different sources that I can think of specifically, is, and because it's something that most people don't think about, is working with your vendors. There are a lot of untapped opportunities that you could reach by looking at the vendors that your e-commerce company works with, because guess who else they work with? They work with your competitors. So without divulging information that would be inappropriate for them to, they could give you generic information, right? And they could help you potentially find more customers too because of other people that they're working with, right? So, because if they're working with other businesses like yours. So it's an untapped resource in many cases where I couldn't tell you necessarily exactly what direction to go in, but start looking at your vendors and thinking about the potential opportunities you could create by just having a different conversation with your vendors besides, hey, here's what we're ordering from you, but going further into, hey, what do you see going on in the market? And really so much untapped potential right there by looking at your vendors in a little bit different way than you're used to.
I'm getting a nudge from our marketing team here. I got to move the show along here, but we're just having such a blast talking about this stuff. We're going to have to maybe schedule a follow-up webinar as well. But I'm going to try to jet through the last few here. But as we've talked about kind of getting that, the right level of control and visibility, ultimately the beauty is that with this financial control, it would be amazing if you could get that, because then you can stop looking backwards and really start looking forwards. Helps you really start to predict what's going to come in the future. And so that helps you prepare for busy season, helps you predict what your order and sales look like. So ultimately you don't over or undersell. And last but not least, in this slide, we've got a couple of a few quick tricks that we want to share with you. Obviously, when we talk about accounting and real-time accounting, we're big fans of obviously QuickBooks and Xero and several of the solutions out there. But you want to get a good financial system of record. And even as you do real-time accounting, you can leverage solutions like Webgility to be able to record all of your transactions in near real time, but also get that real-time reporting. But even as you work through your financials, it's really important that you set up your accounting for success. And Seth, I know you come across so many businesses that kind of haven't really set up their books correctly. I know you spend a lot of time training, in fact, a whole community of bookkeepers, accountants on how to do e-commerce accounting. So talk a little bit about setting up those accounts. And I think we've got just a couple of minutes here before we segue into the Q&A. But talk through some of these tips that you have for us.
Sure. So I'll keep it high level in the interest of time. So first and foremost, you need that third-party app like Webgility that's going to gather the sales data and push it into QuickBooks Online. There are tools you could use to download files and then import. That's already way too much work. You need a tool that can reliably grab that data and push it into QuickBooks Online. That happens first in the process, okay? Because that way the accounting is in. I'll speak to QuickBooks Online because that's what I work with exclusively. Then I do the bank feeds, and I have bank feed rules, detailed bank feed rules. But if Webgility, for example, has already pushed in my sales data, the information should already be there in my ledger so that by the time I get to the bank feeds, things just match up. Right? And I can do a quick confirmation, everything matches up, I can see where a rule has been applied, I know that's reliable, and I can, in a click, just kind of match it into the register and be done with it. So when set up properly, I can spend really no more than maybe 15 minutes a week babysitting the bank feeds, and that's like 80% of the bookkeeping cycle right there. Then just reconcile the statements once a month. All that goes in 2 or 3 clicks because everything's been matched up. We know it's all there, unless there's a problem, which is an anomaly, if anything, right? So that's the way you automate substantially your accounting cycle, is you have the right third-party app or apps pushing the data in so that by the time you download bank feeds, everything matches up and you're done. Like your slide says right here, if you're spending any time on manual entry, it's costing you money and it's a mistake. You should invest the time now to automate stuff, and knowing that it will save you time and then money in the long run. Automation, definitely critically important.
Yeah, and I'm going to end on this last point before we jump into Q&A here. But, ultimately, we see a lot of tools that are recommending that you do some sort of a summary journal as you get your settlement report. But really, that's where you're losing all the visibility. You need to have real-time accounting. You want to know what's happening on a daily basis at the order level. And you want to be able to leverage the tools to really understand, like we mentioned, order level insights. And if you simply capture a summary with the settlement report, your financials are going to be accurate if the tool sort of does what it's supposed to. But ultimately, you're going to lose all of the valuable insight that you should be getting that we've talked about throughout this presentation. So what you want to do is set up really detailed accounting and get to real time. And when you do real time with tools like Webgility, and there's a few others out there that you're welcome to explore, but once you get that real time accounting and control, that's when you get all of the visibility and those insights that you need to make better decisions. Seth, we really enjoyed, obviously, the presentation, but I know we've got a lot of attendees with lots of great questions. So we'll dive in and let's go over to the Q&A portion of the slide.